So hello everyone, my name is Kenneth and I'm going to be your instructor for tonight. All right, so the program we have before us is a financial literacy program, which is tagged Master Your Money, Smart Habits, Smart Investments. It's a financial literacy and investment training for the Thrive Cycle. So it's hosted by the Thrive Cycle, anchored by my humble self, Ken. All right, so I just take us. Okay. So the first question, when it comes to money, the first questions to ask is, what does financial freedom mean to you? Because every time we talk about uh, money, we talk about the first thing that comes to mind is, okay, what am I going to do to be free financially? Because the reason why every one of us go to work, putting so much energy at work is seemingly to be financially free. But are we really free? The answer is no. So the question is, what does financial freedom mean to you? So we're going to be this program is going to be kind of uh, engaging. So I expect to get response from the chat. So you can look at the chat and drop a comment there. What does it mean to you? Understand? So we want to get a response from everyone so that you know where we are. All right. So while we work on that, I will continue. So why financial literacy matters? If you look at the screen, you're going to see two images, a man with wallets and money on it, kind of with that, the first image on the left, the bit you having your money stocked in your bank. And the other guy on the right talks about an individual that planted his money somewhere, kept his money somewhere, and the money is seeding, and you can see the growth on it. So it is not how much you earn, it is how you manage it. 60% of people in North America live paycheck to paycheck. Financial literacy means freedom, not just numbers. So I know that if I talk about financial literacy now, financial freedom, the first thing that comes to mind is I'm still being paid based on minimum wage. How can you tell me about financial freedom? But does that really matter? To a great extent, yes, but no, because I've seen people that are well paid, but at the end of the month, they will be so engulfed with debt all around them because they do not have these skills which you're going to be talking about in this training. So the goal isn't more money. The goal is financial freedom. Yes, for you to be financially free, you need to use money to get more money, which is one way. All right. But beyond that, you can also use your skills, not just literally money, use your skills that you have to get more money. So the question is this: are you among the 60% of the people living in North America that live paycheck to paycheck? I will leave that for you to answer. So the money flow, how does money work? What is the flow system of money? So when you get money, when you get paid in your organization, the first thing that comes to mind is expenses. Okay, I have to pay my bills. I have to uh, go get groceries. I have to eat. The first things that comes to mind. Then after you have eaten, the leftover is what we save, and from the savings you're able to put money somewhere, and thereafter investment. There are other school of thoughts that made us uh, believe or agree that it should be income savings before expenses. But school of thought differs on this regard. But whatever that works for you, whatever you believe in, just understand that there has to be savings. It's a must. For you to be financially free, there has to be savings. Now you're going to be asking me, you just showed us an image that talked about an individual that has money stocked where somewhere in his account and there is no growth. Why are you not telling us about savings? Yes, because it's from the savings you have that is when you can do investment. And it's only investment that can give you the wealth that you're looking for. All right. So this is financial, how your money flows. Every one of us can attest to this, from your company paycheck, expenses, maybe put small for savings. For some, it ends in savings. For some, it ends in expenses. The question is, to you, where does it end? Please, I need this session to be interactive. I want the chat box to be busy. All right. So for you, where does it end? Is it at expenses or it gets to investment? And let me also say this clear here. Savings, especially if you're living paycheck to paycheck, or you are getting, let's say, you are earning you are at minimum wage level for now, savings is kind of hard. Let nobody deceive you on that. So the sentiment you have when it comes to savings, I kind of understand with you. But beyond the sentiment, it is still doable for you to ensure that this flow gets to wealth, which is savings and investment. All right. So the next point here is asset and liability. Assets. What are assets? What are liabilities? Assets are the things that keep money in your hand, that gives you money. Then liability are the stuff that takes money away from you, just like your car, your credit card, your luxury items, all of those things. That's nice. It ends in the investment for me. Wow, that's nice for Bimsola. All right. It's good to know that there are people that actually do investments here. So if it takes money out of your pockets, it is not an asset. Now, some people will argue, what if I have a car and I'm using the car for Uber? Is it an asset or a liability? I'm going to leave that for us to answer in the comment in the chat box. If I'm using a car for Uber, is it an asset or a liability? All right, I'm waiting for your response. Is it an asset or a liability? Okay, while your comment comes in, I will continue. Okay, that will say it's an asset because it brings money to you. That is why it's an asset. But if it's just your daily car that you use for your run around, it's a liability because it's not bringing you money. So you take money from your salary to fix the car once it has it has an issue, maintenance, gas. So it takes money from your house. So that is liability. So the next point here is, so I'm using two screens, so that's why. So next point here is budgeting. The first question here is, how many of us have a budgeting sheet here? Can we have a response in the chat? How many of us here have a budgeting sheet that you follow strictly? Please drop your comment in the chat. You have a budgeting sheet that you follow, not the one that you say, okay, sometimes I follow, sometimes I don't follow. You follow strictly. All right, your silent means a lot of individuals here do not have a budgeting sheet. You don't have one. So what that means is that at the end of this session, from the information you're going to gather from here, you should be able to ensure that you develop one for yourself. If you go to Government of Canada website, you're going to get, there's one there that you can, just put in your information and it will populate for you. I also have one I did both in software and also with Excel. If you need that, you let me know. I can share that with you. All right. So, but it's important that every one of us have a budget. How much should go for my needs? How much should go for my wants? How much should go for investment? And once your investment is within the range of 20%, it is still the baby level investment. All right. So, if whatever comes into your account and is what you can only account for investment is 20%, it is still baby level investment. So savings and emergency fund. So there are school of thought that before you start your investment, that you should have 3 to 6 months of expenses covered before you start your investment, which is true. But the question is this: how many of us here have 3 to 6 months of our expenses? I can say here, good number of people here do not have that. So if that is the case, should you not invest all because you do not have 3 to 6 months of your expenses covered? That's not true. You can still invest. All right. You can still invest while you build your emergency fund. So save before you spend. Pay yourself first. So the idea here is that before the money you have, your paycheck, start going in for all of the expenses, you are the number one person that should be paid. And the money that comes to you that you pay yourself is not the money that you send to people at home. It is the money you use for your investment. So there are recommendations here. EQ Bank, for instance, people that want to save, EQ Bank give around 3.3%, 3.35%. Where if you want to save with them, it gives you that up to that figure. Then Wealthsimple, before now it was around 2.5 or so. I think they cut it down to they cut 0.25 out of it. So it's around 2 point something right now for Wealthsimple. So you can also save with your TFSA. So what this means is this: before all of the expenses start coming in, people calling you from home to send money, ensure that you have been paid. But the question is this: what is that one area that you overspend? Can you put it in the chat? To some, it is food. To some, it is food. To some, it is call from home. To some, it is something else. So can you put it in the chat and tell us which area you spend more? So good debts and bad debts. So good debts help you grow. For instance, if you buy a house, you get a mortgage, is actually debt, but it's going to help you grow. So bad debt is when you use your money to go and finance a car. That is bad debt. When you use your money to do your luxury stuffs, that is bad debt. So use your credit card. You saw a bag at Amazon, you pay for it. So you're waiting for your paycheck to come so that you reimburse the credit card. So that alone is bad debt. So ensure that you incur good debt. For instance, training yourself. You can source for funds to train yourself, to add more skills to yourself. That is good debt. But anything other than that fall under the category of bad debts. So do you have any debts you want to reduce this month? Today is 10th of October. So the question is, do you have that one debt that you want to reduce this month. Can be your credit card, can be whatever you know you're spending on. All right, so savings and investment. When you put money to an account, for instance, you bank with Scotiabank and you put your money every month, you put, let's say, 100 bucks into the account. After 1 year, the money, the difference that's going to be in that money that you put in Scotiabank, you might not even get up to $50 in that account as interest. But the bank will be using the money to do their business. But when you put that money, that's the same amount of money in an investment, there's every tendency that you can get at least 8% or 10, or some can even give you up to 18%, depending on what you invested in. So inflation will even help you eat that money. For instance, if 50 bucks can get you turkey right now, by 1 year time, 50 bucks might not be able to get you turkey. So that means inflation have affected your savings, that what it should have given you, or what the worth of that money when you invested, is no longer the worth of that money, because when you invested the money, you were able to use that same amount to buy one full turkey. But when after 1 year, the same amount of money cannot get you one full turkey. That means inflation actually hit the money so bad. So, but if you put that money in investments, you have good value for your money. Okay, so now the power of compounding interest. I just talked about the investment right now. So when you put in money to an account for a period of, let's say, 25 years, the money is just going to be there with no major difference from the capital. But the same amount, there's a graph here, which the graph on the left, you can see simple savings. On the left, we put like, I think around this based on $100 per month for 25 years. We're going to get 30,000. Now, the same amount, the same 100 bucks for 25 years, with power of compounding interest, we're going to get $160,000. The same amount, the same year, the same timeline, but the power of compounding interest has helped you to grow your fund, as against you just putting the money in the bank and just saving it. So the question is this: are you going to be keeping your money in the bank lying, doing nothing? You should be the best judge of that. Now you're going to be asking me, hey Ken, you just talked about compounding interest investments. What are the type of investment, or what should I invest in? So there are different kind of investments. So you're going to be, if you look at the screen here, you're going to be seeing the green, the amber, and the red. And you're going to see some of the images I have here are green, some amber, and some on red category. So for instance, real estate. Real estate is a good investment with a low risk. Now, bond, for instance, is also a good investment, but a medium risk. But if you want to invest on stock, stock is a good investment with high risk. Between stock and ETF, between individual stock and buying ETF is relatively kind of more stable as compared to individual stock. So what this means is that if you want to invest in low risk, you go into real estate. If you want something medium, you put in bond. But if you want something high risk, you put that in stock ETF. Now, within stock ETF, within stock, and crypto, you can see they are in the same category here. Crypto is more volatile than stock. All right, so that you just know that crypto is more volatile than stock. Stock is relatively, more stable as compared to uh, crypto. Now, there are also different kind of stock. There are also different kind of, what I mean is there are different kind of companies. So the different kind of companies you invest in or the kind of stock you buy will define how volatile the stock is. So there are some stocks that are so volatile by the time you invest in it, it can drop to zero. But there's also a tendency that it will also rise. We have seen markets that crash to zero, but over a period of time, it got itself up. All right, so I just brought this just to show us what the different kind of investments are for you. But if I were advice, you don't put all of your investments in one basket. For instance, you can buy stock, like individual stock, you can buy ETF, you can put your money in mutual fund, you can put your money in real estate. You can also buy crypto. So that you diversify your fund. If there is markets, if the market affects the individual stock, your ETFs are there. If your ETF and stock crashes, your real estate is there. So I just brought this so that you know that there are investment opportunity, but all lies on your risk level. How much of risk are you ready to take? So that's that. So now the question is how to start investments. I know this is one of the most important questions I've been getting since in the questionnaire. How can I start investing? So there are different ways to start, but first you need a brokerage account. And the brokerage account you can get in Canada here, you can get Wealthsimple, you can get Questrade, you can get Momo, you can get, there's another one, Momo, where's the other one again? What's in the other one? There are many of them, right? But I just mentioned for a few. So you can get any of them. But amongst all of them, one of the ones that have good interface for me that I would recommend to a beginner is Wealthsimple. Wealthsimple has good interface, very simple to use. Questrade is also very good. But the interface for Questrade is good, it's easy, but for beginners, you'll find it more easier with Wealthsimple. So you can start as low as $50 per month, as low as that. And you're going to ask me, how about there are some stocks that are $600 per share? How can I buy them? There's what we call fractional shares. So what it means is that you can buy a fraction of a share. You can just put, okay, you have $50, you just put the $50. The system will give you equivalent of shares that is to that $50. All right. So for a beginner that is investing alone, you don't have someone holding your hand, guiding you. You don't know how to interpret or analyze the market. It is best you invest on ETF and index fund. Right? It's nice to invest on ETFs and index fund. But the goal is not just investing one, it is to automate the system so that you can keep reinvesting. A friend of mine says, automate the system, forget the password, and just keep investing. Because if you don't automate the system, there's every tendency that you have need that are so urgent you need to take care of. That is to say that month you will not invest. And the next month there will be need that you will not invest. The other month there will be need that you will not invest. So that is why it's important. Automate the system. And when you're calculating how much you earn in a month, remove that total amount. For instance, if you're investing 50 bucks or 100 bucks on, for instance, an ETF, if you're investing 50 bucks in a month and you earn 1,200 bi-weekly, please remove that amount from how much you earn. So that if you are telling yourself this is how much I earn, that amount will not be there. So you forget about that amount. So this is how investing works. It's not just about investing today and say, okay, tomorrow I'm not investing, I have needs. As long as you skip one, the next month you are going to skip it. So the question is this: if you want to start investing today, what investment option are you going to explore? All right, now I'm going to get a response from you. All right, I want to be sure that people are here and they are listening to me. So what investment option are you going to explore if you want to start investing? Please, the chat box is open. I want to get responses. I'm waiting. All right, ETFs. Thank you, Tolu. I'm waiting for other people to respond. Medium risk. That's nice. ETFs. Okay. All right, thank you. So either you choose medium risk or high risk, but also know that what you're going to get is depends on the amount of risk you are ready to take. So don't forget that. So the financial goals. So we have short term, which is to pay off your credit card debts. I know that for many of us, our credit card, we pay off the credit card immediately they bring the statements within the 21-day cycle. So for those that don't know, credit card have a 21-day cycle. All right, so you pay off the credit card within the 21-day cycle. So the midterm financial goal is to buy car debt-free. Buy the car that you can be able to pay. Don't go financing a car. It is wise to finance a car if you have a system that is generating you money stresslessly. That is to say, your money is working and you are working. So the investment you have is enough to pay off that debt from that car. Then it's good. But apart from that, for now, if you want to buy a car debt free. And the long term is to retire early. The question is, I usually ask this question to people around. I want to also hear from you. When do you want to retire? At what age? 40 years, 50 years, 65 years. In Canada, the retirement age is, I think, 65, if I'm not mistaken. You can also choose to retire early. So the question to you is, when do you want to retire? When you're 40 years, when you're 50, when you're 60, or when you're 65, or even when you're 70? Because here people still work to 70. So please write that down and tell yourself when you want to retire. So your network, your true score. So you have to be intentional about tracking your progress. You have to be very intentional about that. Your growth, your investment. For instance, if you say, okay, this year, 2020, the remaining months of this year, I'm going to pay up all of the debt I have. And I'm going to keep investing even while paying that debt. But from year 2026, I'm going to invest aggressively. So you should ensure that this is defined, not just leave it to luck. When it comes to money, really, there is no luck. When it comes to money, you have to be very intentional. There are some people that have people that can, support them. But the question is this: Are you in that category that when you're 50, apart from your children, when you're 50, you have people that can support you financially without a feeling that you're stressing them? So if the answer is no, then you need to be very intentional about planning how and when you're going to retire. How you're going to retire. How much do I need if I want to retire at 50? How much do I need? What are my expenses now? If I factor in the expenses, for instance, if my expenditures, I'm spending like, let's say 1,500 in a month. If I calculate 1,500 in a month, multiplied by 1 year, multiply, let's say, another 10 years, 20 years, as long as you want to live, how much is that? Then that is how much you should have handy if you want to retire at the age 50, at the age 55, at the age 65, or whenever. Because when you retire, the CPP they are taking from your account right now can only be accessed when you're 65. And that CPP is not much of a money. That's what I want to let you know, that so that you won't say that, okay, there is insurance somewhere, it's going to be paying it. No, it's not much. To some, it's just 800 bucks. To some, is 600. To some, is even 400, depending on what you are earning while you are working. So building financial income streams, multiple income streams. So as individuals, you are going to ask me, okay, how do I build financial, have multiple streams of income? I'm just doing the little job I can do right now. Is it about working more than 40 hours? That is not really what I mean when I talk about multiple streams of income. All right. It's about you having businesses that can be able to pay you while you work. You can have systems that you automate that can be able to generate you money while you are still doing your 9 to 5. So you can, I also forgot to mention this when I was talking about stocks. There are some stocks and ETFs that are dividend paying stocks. So not all stocks are dividend paying. So there are some stocks that pay dividend. There are some stocks that doesn't pay dividend. So know this. It's very important that you know this. So dividend and passive income. So there are some people that have grown their portfolio to a point where their account can pay them, their stocks can pay them up to 1,000 plus dividend in a month. So imagine if you're getting 1,000 plus dividend in a month and you're still doing your 9 to 5. You can retire anytime you want. All right. So you can also start content creation and teaching people, tutoring, freelancing, and digital skills. So the bottom line here is find a niche for yourself. Look for something that you can do that can be able to pay you, something that you can monetize. So they can have multiple streams of income, not just relying on one. The day they said you should go home or you are laid off in your company, it becomes an issue because you have to go home and there are no other source of income. And your friends and people around you start bearing the burden of you always demanding and begging them for money or for support because there was no adequate plan. So please ensure that you create a system for yourself. And let me also say this clear. It might take a while for the system to mature to a point where the system will start paying you. So you can have, let's say, 3 years go to say, okay, for instance, if you want to invest in stock, I'm going to invest in stock for these 3 years. And after 3 years, I should start getting good amounts from my investments. You can say, okay, I want to open a business today, and you give it 1 year, you give it 2 years, and within that 2 years, the business will start paying you. So it's not something that you just start now and say you want to start enjoying the dividend now. So I just need to point out that. So financial scam and red flags. If it is too good to be true, just know that it's not true. For instance, someone is telling you, give me 10 bucks, or let's say 1,000, within 1 month, I'm going to give you 40% interest. My friend, run, because that is not realistic. Even the bank doesn't charge that. All right. So I've been a victim of Ponzi. So please avoid Ponzi by all means. Stock is not Ponzi. Stock will not make you get rich overnight. It's something that you need to grow over a long period of time for those that want to invest long time. So it's not a get rich scheme. So ensure that you do your due diligence research when something appears to be too good to be true. So what mindset? So the tips here is don't work for money. Make money work for you while you sleep. As you wake up every day to go to work, your money should also wake up every day to go to work. In fact, your money is not even allowed to sleep. But even if it has to sleep, immediately you're up from your bed, your money should also be up and go to work just the way you're going to work. So that is why it is important that your money doesn't lie in the bank, sleeping, doing nothing while you are working your ass out. No. You should ensure that the way you're busy working, your money should also be working like that. So live below your means, be consistent, beat intensity, learn, invest, and repeat same. There is no competition anywhere. It's only you that are competing with yourself that I want to live in this house. There is a level that you are right now. Stay in that level. Based on your finance, stay there while you build yourself, build your portfolio, develop yourself. When it is time for you to move, you will know. Even your finance or your pocket will know that it is time to move. So don't go trying to please anyone. If you try to please me, you'll be displeasing your pocket. You'll be displeasing your accounts, and you'll be displeasing your money. So it's a waste of energy trying to try to please someone. So be consistent in your investment. Don't just, like I said before, don't invest now and wait for tomorrow. Invest now. As you get paid, every paycheck, something should leave your account to a place you cannot touch. Something should leave your account. All right. So that's that. So what are the action plan? Create a simple budget. Build your emergency fund. Start your first investment. Set one financial goal this week. Set a financial goal this week and start that investment. Don't procrastinate. Don't wait till next month. Don't wait till next month. Start that investment now. Many will say, okay, can I just, do it next month? The more you procrastinate, there are going to be needs that are so important that you cannot do without. And you say, okay, let me leave it by November. Let me leave it by December. By that December, the euphoria of the moment, the celebration season will set in, and you cannot still invest. Now it gets to January, you now have to pay bills for a lot of person that wasted their money during the celebration season. Still, you cannot invest. So what am I trying to say? Ensure that you start your investment now. Don't wait for someone to push you. I know that you're not earning so much. I know. You will tell me I have this debt, I have this bill to pay. I know. There is no one here. There is no one here that does not have one strong financial commitment to take care of. But that will choose to invest is discipline. So make sure that you take note of this. So just a quick recap. It's important that you manage. It's important that you save. It's important that you invest. It's important that you grow. It's important that you protect what you have. So don't be that fellow that will throw all of his or her money trying to please people. That after working for many years, you will come back to say, I don't have any savings. Listen, the people around you that you are spending that money for, they will still be the one to ask you, what did you do with your money? They will still be the one to ask you that you were useless, you are not smart enough to ensure that you invest and keep something for yourself. So what am I trying to say? Invest, invest, and invest. Have a budget. For people that call you all the time for money, have a budget to say, okay, every month I'm going to be supporting people at home with, let's say, $200. If you exceed any needs that exceeds that $200 should be moved to the other month. Unless it's an emergency, someone is at the point of death. I always tell my wife this, and it sounds funny. I say, if I'm spending this money, let the person make sure that the person doesn't die. All right. I will say that funny, jokingly, but there's a lot of sense in it. All right. So ensure that you budget, plan, budget, and just don't be that fellow where anytime your sister calls you, there's always money. Anytime your brother calls you, there is always money. The effect of that is that you will not be able to save a kobo for yourself. You will not be able to do a good investment for yourself. With the amount you are earning right now and your expenditure level, you should be able to have every paycheck at least minimum of $200 leaving your account to an investment, or even 400 for some, even so to some 500. But the question is this: how much is actually leaving your account to an investment account right now? If I allow you to talk, I'm sure I know what you're going to answer. So it's important that you are smart about money. Just like I said earlier, financial literacy talks about your knowledge of what you should do with money, how you should keep it, how you should invest it, how you should manage it. So don't be that fellow that throws money everywhere and they'll be calling you good person. If you want to be useful to yourself financially, don't be afraid to answer the bad name. I'm not saying you shouldn't give a helping hand, give a helping hand, but be smart about it. Ensure that you pay yourself first when you are doing anything that has to do with money. When money enters your account, you pay yourself first. Now, to the married folks, you say, okay, how does this concern us? For those that have children, government pays you the child support. That child support is not your money. So without the child support, you were living. You were paying your bills. Now the child support came. You were now living like a big woman, buying what you don't need and living above your means. So that money, as it comes, is supposed to be thrown to an investment. So that money plus your own money should be thrown to an investment. Don't use that particular money that government pays you for your personal expenditure. So that is one. Now, for those for those that are married, they say, okay, my husband earns this amount, I earn this amount. How should we manage our money? It is based on case by case, all right? Everyone or all cases are not the same. But on a general ground, two of you should be able to come together and say, okay, this is the amount coming to the family now. For instance, if the woman earns in a year earns like 40,000, the husband earns 50,000. The total amount that comes to that family is 90,000. That's the total amount that comes to that family. So out of that 90,000 that comes to that family, you should be able to open an investment account for the woman and for the man. That every month you will have it defined that this amount is going to this investment. And all of the needs in your family, all, when I say all is all, both your clothes, both everything should be captured in your budgeting. So that at the end of the day, you have all of your needs captured there. Then how much you go for an investment, should also be captured there so that you automate that. Maybe it is automated. You don't need to bother yourself about that. The system will automatically debit you and buy. For instance, if you want to invest in stock, the system will automatically debit you and buy the stock you want to buy. So that is about that. I wanted to run something for us so that we have an idea of what I'm trying to explain when it comes to compounding interest. Just give me a minute. Do you have any question? I will entertain question while I look for this. Is any question? If you want to chat, you can drop the chat. If you want to say it, you can unmute your mic and speak. No one have a question.
I have a question.
All right, go ahead, please.
Yeah. Do you think it's wise investing back home while being here?
All right. The question is, I also asked you a question. Okay. I hope that's fine. The investment you want to do back home, who is going to be managing the investment? Is it investment you can do from here and manage from here, or you have to put someone to manage for you at home?
Okay, let's say if I have to put someone to manage.
Okay, I will tell you from experience, it is not a wise decision. All right. From experience, I'll tell you it's not a wise decision. The reason is because you are not there to manage the business. And if your husband is at home to manage that business, because it's only two of you that have a like mind, right? Your siblings, they have their own issue. So they won't be able to take care of things the way you and your husband will be able to take care of your stuff. So if your husband is at home and you want to do investment back home, that's perfect. He will be able to manage that and run it like he's his own, because practically two of you are together are one, right? But if it is that you're going to employ someone and the person will be able to manage that business for you, that is not a wise decision. You only be enriching the person. I don't know if I answered your question.
Yeah.
All right. So if you, for instance, if you want to invest in the stock market in Nigeria, that is perfect. You can invest. You can stay from here. Download Bamboo. There are different brokerage accounts you can open in Nigeria and invest in Nigeria from here. All right. But that you want to open a shop, even if you like, put camera in that shop and monitoring the shop from here, you will have high blood pressure. Sorry to say that, because if they disappear with your capital, even while you are in Nigeria, your salesperson can decide to disappear with your resource, not to say that you're not even in Nigeria and you're running business from Nigeria. So I will not advise that. I had maybe one of these days I will bring the lady to talk to us, maybe share her experience with us. While I was in the Middle East, I had a lady that every time she works, all her money she sent back home to her elder sister's accounts. And she saved up to, I think, around 8 million, if I'm not mistaken, Nigerian money. So she said, okay, she's no longer working again. She want to go back home and invest what she has saved. She went back home, and getting home, she asked her sister, how far can you get the money for me so that I can start my life? The sister said, the only money you sent to my account was 800,000. Don't forget, she sent around 8 million, and that's what I was aware of, because many times I audit her. All right. So, but her sister said, you only sent 800,000 to me. It caused a lot of issues for them. A lot. That even till today, they are not still in a good terms, because even till now, the sister couldn't bring the money. So that is why you need to be careful when it comes to money. Money can divide family. So you have to use wisdom in managing money. All right. Any other question? Did I answer your question correctly, please?
Yes, you did.
All right, thank you. All right, any other question before I'll stop sharing and I will share something else? Any other question, please? People don't have question. I'll ask people a question. I need to answer your questions. That's why I'm still insisting on question, because I know after now some people will come to my DM and be asking me a question directly. So ask your question now. Can you see my screen, what I'm sharing? Can you all see my screen? Can someone please respond to me? Can you all see my screen?
Yes, yes.
What are you seeing on the screen?
Investment and retirement.
Okay, all right, thank you. So I want to run a check for you so that you know that when it comes to money, it's not a luck thing or kind of a probability thing. It's a certainty. All right. So I'm going to be running a check here at age 20. All right, for someone. So age 20 for someone. So this is the current age of someone here. Okay. So, and the person plan to retire at age, should I put 50 or 60? Okay, let's use Canada age, retirement age 65. And the person started have in his contribution. Okay, let's say no, the person do not have any amount in here. So the person want to be contributing 100 bucks every month. So I will give for annual return, I'll give 12%. So let's see how much this person will make when the person is 65. If the person is consistent. So if you check, you're going to see that you're going to see the initial, which is 0%, zero. You're going to see the contribution 54,000. That's so for that years the person invested from 20 years to 65. The total money the person contributed from his pocket was 54,000. That was the total money the person contributed from his pocket. But the growth on the account is 2,091,467. So this is the power of compounding interest. So, which is to say that if you put this money in a savings account, this is what you're going to get for 45 years. This is what you're going to get. But if you put the same amount in an investment, with you doing less, just keep being consistent, contributing your 100 bucks in a month, you're going to get, by the time you're retiring, you're going to get 2,145,467. So this is just to demonstrate the power of compounding interest. Just to explain to you that when it comes to investment, time plays a critical role. The age you are plays a critical role when it comes to investment. So for the person that is, let's say, let me use 30 years, and the person wants to retire at 65, and the person contributes 200 as against 100. So you see that the person that contributes at the age 30, that contribute 200 every month for 35 years, didn't get up to 2 million, but got only 428,000. And if you see the contribution from the person's pocket, you're going to see it's 84,000. So this person actually contributed more money from his pocket. But the growth is not cannot be equated with someone that contributes or that started earlier at age 20. So the question now is, what is your age? How many years do you have to retirement? And why have you not started investing? I'm going to run another one for 40 years. Okay, 35. Because many people here know that within this age bracket, 35. So I'll run another one here. So you see that, okay, let's put here 300. For 300, so you say that for 30 years of investment, the person could not even get up to what the person at 30 got. This is only 1 million. And even the contribution from pockets is more. So this is how investment works. You are 35 years now. If you want to retire early, let's even assume that the person that is 35 years now is contributing 500 in a month. So at age 65, you're going to get 1.7 million. Let's assume also the person may want to retire at age 60. You're only going to get 939,000. So this goes to tell you the importance of time as regards to investment. You cannot take away time when it comes to investment. You cannot take away time when it comes to investment. So this time you're procrastinating and saying, okay, I will do it tomorrow. I will do it day after tomorrow. You're actually wasting your own time. You're actually killing yourself. So instead of wasting that time, why not you just start? Even if you're going to increase it tomorrow, even if it is just 100 bucks in a month, start. Don't wait. So if you're paying, if it's 100 bucks, that means every paycheck you're paying 50. Start. If you can pay 100, if you can, invest 100 every paycheck, start. If you can invest 200 every paycheck, start. Bottom line is, take away the excuses and ensure that you start. Because for us to thrive as a community, we want to see a community where every one of us are doing well financially. It will be so easy for us to reach out to our community. It will be so easy. But when few person are the only one doing well, you have portfolio, you have good portfolio, and the other person does not even have anyone at all, then it becomes very hard for us to support our community. Because time will come, people will join our community with needs that we need to take care of. If we are not thriving financially, how can we be able to support them? How can we be able to reach them? So I don't want to be the only one thriving financially. I want every one of us in this community thriving financially, which is the reason why this timeout, this training, this coaching session is put together, so that every one of us wake up to what is important. So I'm going to pause here and ask if we have any question. Do you have suggested ETFs to invest in? I've been waiting for this question. I do not have suggested ETF to invest in. That is it. Simple answer to it. But I have ETFs that I invest on. So if you want to have an idea, see what I invest in, and you want to invest in the ETFs or even the individual stocks I invest in, then I'll be able to show you or tell you, okay, I invest in this one, but it is not an instruction for you to go invest in what I invest. The reason is because in Canada, everything is based on license. So I'm not a licensed investment advisor. So that is why I cannot answer you straight line. Do I know ETFs to invest in? For myself, yes. I can also show you these are the ETF. This is my portfolio. I can show you my portfolio. These are the things I invest in. All right. I can hold your hand and tell you, okay, based on what I'm investing, if you want to invest on what I'm investing, okay, this is it. All right. So that you just have an idea of what it is and you can take it off from there. So that I'm going to do one-on-one with you, not sharing public. So anyone that wants to have an idea of the stocks and ETF I invest in can reach me directly. I will share that with you directly and we can take it off from there. Does that answer your question? Okay. Any other question? Ask your question now. You have opportunity to ask all your questions. I'm ready to answer your questions now. Favor, what question do you have? Fiona, what question do you have? Everyone, tell us something. Okay. Please, sir, can you share the budgeting sheet you use? All right, I will share that. Is there another person that I want the budgeting sheets? Is there another person that want the budgeting sheet? Okay, I will share that with you, Bunisola. Okay. Okay, so I'm going to be dropping since, okay, how do one know which ETF or stock to invest in? That is where analysis, understanding the system works comes in. All right. So, for instance, there are known stocks and ETFs that are doing so well. For instance, SPY, QQQ, like S&P 500. What it means, S&P 500 is the the stocks that houses the high performing companies in US. All right. So 500 companies, high companies in US are all categorized in a particular ETF. So one ETF manages all of them. What it means is that if a company is not doing well, the ETF will kick them out and put another company. So that is why it's advisable for beginners to start with ETF because ETF is more kind of stable, all right? But for instance, if an individual stock is not doing well and the market crashes against them, you will temporarily lose your money. Yes, they're going to come back, but for that time, you will lose your money. So when I say lose your money, this is what I mean. If market crashes, markets will bounce back. So that is why it is not Ponzi. For instance, if you invest in NASDAQ, like the tech ETFs, the market is very volatile that it can crash to 70%. But after a period of time, it will rebound back. It will bounce back. So when market crash, it's not a time for you to sell. No, it is time for you to buy more because the system will definitely come back. All right. So for ETFs to buy or stocks to buy, I can do a demo. We'll find another time where I will do a demo of my account just to show us the kind of as in what I invest in. I can share that with you if it's something that I also show you how to just check online. For instance, if you go to yahoo.finance, you can type the particular ETFs that you have interest in, and you will see the history. You will see all of the details concerning that ETFs and how the ETFs have been doing for the last 5 years, or even stock has been doing for the last 5 years. But that one is kind of an analysis, right? So for the beginning time, you might not understand all of that, but I can do a demo to show you how all of those things work. All right. Okay, so right now there is no ETF that have crashed. All right. All the market is doing well right now. So should you say you will not invest or because nothing have crashed, no ETF has crashed or saving stock? No. We don't wait for market to crash before we buy. When we automate the system buys for us whether the market is booming or not booming or bullish. The system automatically, the system just buy for us. We just want the system to buy for us every time. Because for me, investing in stock is not a short-term plan. It is a long-term plan for me. All right. So for some have planned to just invest for 2 years. Some have planned to invest for 5 years. But for me, I'm not investing for 2 years. I'm not investing for 5 years. I'm not even investing for 10 years. I'm investing for very long term, right? So that is why I don't care how the market is doing now. I don't even go looking at it to see how the market is doing today. My own is I'll automate the system. Just buy for me, buy this stock, buy this ETF, and buy this one. And I go to sleep. Immediately my paycheck comes, the system automatically debits me and buy for me whether the market is doing well or not doing well. So we don't buy only when market crashes. We buy at all time. All right. And for those that knows how to trading currency, you can also trade. So not just one, you can trade. And for me, the money I make in trading is also invested back into the system. All right. So the goal is that all of us should be doing well. So this is a link I've shared in the chat box. This is for Wealthsimple. If you use this link to register with Wealthsimple, you're going to get, I think, $20 or $25 for a bonus or sign up bonus. So if you want, you can use that link and sign up. And let me know that you have signed up, and I can help you to be able to guide you on how to even automate the system, guide you on the kind of stock that I'm investing on. If that interests you, you can also invest in them, and we can start the investment journey from there. I'm so happy that all of us here, we are so okay. No one have question. That means all my time talking to us is really yielded. I really like that. Okay, so that's that. If there's no question, we're going to be calling it a day. But don't forget, if you have any question with regard to investment, don't forget to share that. But I'm going to take our time, hopefully by next week, to do a live class, a live one, to talk to us about stock. talk to us about, all of the setup. We use Wealthsimple to show us how to navigate the system and how to automate even reinvesting your dividend you get from your investment. So with all of that out of the way, and all of your questions, thank you so much for joining us to do this today. I hope you learned something. Did anyone learn something today? Let me see it in the chat. If you learned something, please put it in the chat. Did anyone learn something today? That's nice. That's nice. There's only one person that learned something today. Okay. So for Tolu, you can just click that link, register. Let me know that you have registered. All right. So we'll take it off from there. Okay. Okay. All right. Okay. So we'll make our time to do that by next week so that everyone will start their investment journey, start building your portfolio. I want to see people having 10,000, 20,000 in their portfolio very soon. All right. All right. Thank you, everyone, and have yourself a good night's sleep. We're going to do this again. Please go to the group, and let's make some noise in the group talking about what stood out for you in the session we have tonight. All right. Let the people over there know that something actually happened. All right. Thank you, everyone, and have yourself a good night.